Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Thanks everybody. Let's return right back to discussion of the Japanese yen. Well guys, today I have taken a look across the board and hasn't found any really tremendous setups that could be ready for immediate trading. On the euro currency, euro stands flat because everybody just wait for European Central Bank meeting on Thursday, and very probable that euro could just not to show any significant action till this moment. The one interesting moment is also stands on the Great British pound, but we already have discussed this setup, and I just will show you the picture. So market, as you can see, still continue with our ABCD pattern, and we said that after this minor bounce as a respect of this resistance of this oversold, it should continue move lower and hit this target. And now market stands underway. So I have decided to speak about the Japanese yen because in general the analysis of the Great British pound is still the same, and I can't add something new. Market just is continuing with our trading plan. It's nothing surprising now, nothing drastic has happened, and I do not see any necessity to intrude in the normal behavior and to speak about this. So because in fact as everything stands normal and market behaves as it should, and it stands in the good relation with the normal market mechanics that market should show in the current situation. That's why I have decided to speak about the Japanese yen again. Well, on the monthly chart, we have discussed yesterday the foundation of our assumption that market really could continue move high and take out of these highs. And the foundation for that, the cornerstone of this analysis is this pattern. That minor candle on the monthly chart contains big power, because that is the monthly bullish stop grabber, and it suggests the taking out of these highs. In general, guys, you could see that something that looks like the wedge pattern is forming in the very long-term perspective. So if we would take a look at the even bigger perspective, we will find that here is forming the bearish wedge that in general suggests some downward breakout. And that, in fact, what we have discussed in our weekly analysis on the Japanese yen that we have prepared earlier. Recall that in the really big picture we expect deep retracement down, because previously on the monthly chart we've got really huge downward momentum, and that the first upward action after that. It's the first, in fact, reversal swing. That's why in the long-term perspective we said that we expect after some significant resistance will be hit, and it stands slightly higher than currently market stands. So if you'd like to know about this with the more details, you could find the recent analysis of the Japanese yen, and you will find the detailed explanation of our thought and view on the Japanese yen. But in 2 words, we expect the reaching of the resistance that stands slightly higher than the market right now stands, and then turning to the deep retracement. That's our view on the really big picture. But now we stand in the first stage of this long-term plan, and it suggests a bit more upward action. And this upward action could be triggered by this stop grabber. At least its low will not be taken out by the market. This pattern will be valid. And from that perspective, we could count on this context, count on this setup until this low will hold. And until this will happen, the chances on upward continuation will exist. Also, guys, take a look what price action market shows. So that's the sideways action with the 1, 2, 3, 4. This 5th month in a row market stands flat, and above this previous top. So market has formed the top, breaking through it, return right back down, stands above it. So trend shift bearish, but market stands flat. It suggests appearing an existence of maybe some bullish dynamic pressure. Anyway, this setup and the pattern on the monthly chart is bullish, and that's our foundation for all other steps on the lower time frame charts of our analysis. So now if you take a look at the daily chart, in fact we see here the same picture as yesterday, with the one more detail. Yesterday we said this market has shown the fast acceleration out from the monthly pivot point. We need some bounce down to take the position, to possess ourselves on possible upward direction. But yesterday it was difficult to say where market could show this retracement. Either it will show it immediately, as we said yesterday, or it could continue right to the monthly pivot resistance one, and after that show some significant retracement down. And as you can see, market has chosen the second scenario. If we take a look at the 4-hour chart, we'll see more details of this. Particularly speaking, right at the monthly pivot resistance one, we have the agreement with this fib resistance. That's also 102.68 fib resistance. I will show you. That's the 618 resistance area from that recent swing. From this high to this low, this is 618 resistance, and we have some agreement with this resistance: A, B, C, bottom, D pattern. So that is what we see right now on the 4-hour time frame chart. So in reality, we could say that right at this area stands really strong resistance area, because that's monthly pivot resistance, fib resistance, and take a look, the target of this very harmonic, very nicely looking A, B, C bottom pattern. That's why in the current area we should not take the long position. We should wait for bounce down, and if you trade on the intraday charts, you should watch for possible reversal patterns that could be formed here that will trigger this move down. Our levels to watch for potential long entry stands in this area. So that's confidence support, as we said yesterday, 101.94, 102.04 area. That's major level to watch for. It's potential long entry, because that's also coincides with this previous top. So you can see top continuation, so market could retest it and continue move high. That's normal development when the market is bullish and it really has intention to continue move above it. If market will break through it and move below the weekly pivot point, do not take long position. Wait for more details, because yesterday our forum member Minimax has posted its analysis, and he said that here we could get butterfly sell as well. So that could be the left wing of the butterfly, and that could become the right wing. So market could show this retracement and turn down, and we can't totally exclude this possibility, because this is really possible. He has explained it from the perspective, from the point of view of the Elliott waves, but the idea is the same, that market really could show the pattern and downward continuation. And this, in fact, for us, this is the question of these lows. So if market by some reason will take out of these lows, that will raise the bullish setup, that will raise the butterfly, that will raise the bullish grabber on the monthly time frame chart, and in this case we will not be able to count on the further bullish action anymore. That's why if we take position in a retracement down to the monthly pivot point, approximately the confidence support on the 4-hour time frame chart, in this case we will take not very significant risk, at least in terms of the daily chart, because the risk-reward ratio will be very attractive. Okay, and in general this is not could become not bad trade at all, even if as a result at the end we will estimate that we was wrong with this entry, even if market will continue move lower. Because in general that will not be the mistake, that will be just a probability question, and because we have the setup for taking the long position, we have not bad area for entry, and in general risk-reward ratio will be also attractive. So that's why we can't call it as a mistake, as market will continue move lower. Well, so what to do in the nearest future? What to do for today? Here we should keep an eye on the hourly chart and just wait for possible patterns that could be formed here. As soon as we will get the reversal pattern in this area, that will be the moment when the retracement should start to the downside. So here you have two possible action to do, two choices. So first is do nothing and just wait when the market will hit the support area that we have just discussed, or if you would like to trade it, you could try to trade any reversal pattern that will appear here, with the placing the stop somewhere above the major resistance, above the monthly pivot point, above the 618 area. So in general, the setup is in the short term as in the long term on the Japanese yen is not really bore, and it's really worth of our attention.